Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Welcome to the Finovate podcast. Joining me today, we have Jim Bruene, the founder of Finovate. You can find his writing now at fintechlabs.com. Jim has been in and around the financial technology industry since there was a financial technology industry, really. Jim, thank you so much for joining me on the show.
Wow, that makes me feel really old. Since the beginning of time. Thank you, Greg.
Well, I mean, okay, fair enough. But fintech is not super old. And you now have the perspective. And that's what we really want to talk about today. You've seen how the industry has responded to a couple of different financial crises. And you actually recently wrote an article about this back in April, about comparing the current crisis to the dot-com crash and the financial crisis, 2007, 2008, what those have done to the fintech industry. And I think it's really useful as we look at what is happening now to go back in time and think about some of those earlier crises and what they meant for the fintech industry. So, I think to start, just having you kind of talk through the dot-com crash. Obviously, this was sort of before fintech really started exploding, but it did have a major impact on the industry. Can you start by telling us just what you saw at that point around 2000, 2001?
Yeah, I've definitely been thinking about this, trying to figure out how this current crisis compares to those. And that one, it seemed just brutal at the time because things had got so hyped with financial services and what you could do online, and that it just came crashing down so fast. And the aftermath of it was really took a long time to come back from. And it was really the low point was 2002, I think, in terms of the stock market crash. And the banks were very hesitant to spend anything on new initiatives in the aftermath of that. They'd come out with these optimistic plans in 1998 and 1999, and they just had egg on their face afterwards. So it really, really subdued investment for the next 5 or 6 years.
Yeah, you mentioned that 5 or 6 year drought in fintech innovation, but also you mentioned that there were a couple of important companies that were sown in that stretch, including PayPal. Obviously, would go on to be one of the most successful fintech companies, one of the first really major fintech companies out there. Prosper, Zoka, Mint, Credit Karma, these businesses all kind of came about as a result, not as a result of, but in the aftermath of that. So some business proceeded, but it does look like it was substantially slower. And then, of course, the financial crisis that hit really right as Finovate was getting started. The first Finovate was in 2007. The financial crisis shook us right after that. As Finovate is in its infancy, we saw this gigantic seismic shift in the banking industry and the way that affected things. Talk us through that one a little bit for people who don't have the benefit of your experience, might be a diplomatic way to say that.
So thank you. Financial crisis really came so quickly after the dot-com bust that we didn't really ever get fully back building new things before this next one came upon us. So like I said, it took 4 or 5 years after 2001 for things to start heating up. Right as they started going 2005, 2006, the beginning of 2007, then all of a sudden the financial crisis hit. And that made the dot-com crash seem like nothing in terms of the banking sector. And they were just on day-to-day survival mode. And I use the analogy of they're like a restaurant today where they're just trying to get to next week, trying to get to next month. The banks are doing the same thing, trying to get to the next month. So again, all their digital initiatives and financial services online ideas were shelved once again, just when they had put them back into the plans for 2007. Then they're on the shelf again, and that lasted for a couple more years. So really the start of this decade, when they finally started dusting things off and moving forward, 2009, really 2010, 11 is when it started back up again.
Yeah, well, and one of the things you mentioned in the article is, there's this pent-up demand from consumers for digital services. At the same time that was happening, broadband internet became much more widely accessible. Smartphones became much more widely accessible. Well, by widely accessible, I mean came into being, I guess would be a
Yeah.
fair way to say that. And so all of a sudden, from a consumer standpoint, you had these expectations that were starting to rise. And we saw the financial industry being really far behind those consumer expectations. And that's something that I think you can argue continued for quite a while afterwards. And maybe over the course of the last 10 years, there's been some progress in starting to catch up. But I think you'll still find a lot of speakers and authors who would say that the financial industry lags behind other industries when it comes to meeting customers where they want to be met. But again, as we saw the first one, there were quite a few really substantial fintech companies that came about in the aftermath of that, starting in 2010. Robinhood, Betterment, Stripe, Coinbase, Revolut, all of these companies that we think of now as these behemoths, and maybe they are behemoths in the fintech space, came about shortly after that. So now we've set the stage. We've got two cases where we've got kind of dire consequences and dire shifts in the market, followed by somewhat positive. There's been some good things that come out of it. Let's talk now about the coronavirus crisis, where obviously we're in the middle of the pain point. Will there be some sort of silver lining to this cloud? Will there be something which will make not make this worth it, but at least give us something positive as a result of everything?
Yeah, I've been trying to think about that. And there really was positives that came out of the financial crisis with just what you described. So many new ideas chasing all this pent-up consumer demand. And I'm trying to figure out if that same thing is going to happen this time. It's a little bit different. We're in the beginning, middle, or somewhere in the middle of the crisis, so it's a little hard to see what's going to happen. But also, at this time versus 2010, there's so much more technology built out, both the picks and tools and all the enabling stuff, but all of what consumers do. So it's a very sophisticated consumer mindset right now in terms of financial technology, which wasn't the case 10 years ago. So I don't know what's going to happen exactly. I think there will be more of a period of consolidation where we had so many new companies and so many new things that probably with capital access down a bit in the wake of this crisis, there'll be some companies that are consolidated and merged, and we'll see some of the bigger brands that have a good head start on things really move forward in their positions, the Robinhoods and Chime. But I also think it is not bad news. This is all bad news, but relatively an okay thing for the legacy banks, because the brands that have been around for 100 years or that have been through a pandemic, have been through the world wars, I think consumers are going to still gravitate to them for the next few years, because they're going to be afraid, they're going to want their money safe, and they're going to want to stick with a name that they've heard of. The banks could come out of this with pretty solid consumer loyalty.
Yeah, well, one of the things that's really different about this one in terms of the financial technology industry is obviously the first two really dealt directly with, the first one, the dot-com bust, was a technology boom and then technology bust. And then the banking crisis was brought about by, bad actors in the financial space. And so if you look at, the two words that comprise fintech, financial technology, 2001 tech, 2007 finance, and now 2020, this is one that exists outside of both of those two worlds. And so it looks like it will be different in terms of what the recovery is like. Although, as you say, there will be some kind of credit crunch. It'll be more difficult for companies to get funding. But I just think back to the early days of, when I first joined Finovate back in 2009, and we saw companies who were coming onto the stage who had substantially less funding than companies do now. And I sort of looked at that and thinking, maybe that's okay. Maybe you don't need to have these massive Series A funding rounds for companies to reach the market. Maybe not every company has to be a unicorn to be successful. Maybe there's something to be said for, hey, let's start with smaller funding rounds, give you more time to prove out the concept. And I think so much of what we saw in those early Finovate days was less glitz, less glamour. Fintech was not a sexy marketplace at that time. You could have actual honest to God nerds up on stage. And there will always be room for that, of course, at Finovate. But so much money got built around fintech with PR firms coming into it, with people who are really putting all this shiny gloss on top of everything. And you wonder, well, is the foundation there? Is the products themselves, are they really at the level that they need to be to make a difference? And if you strip all that away, and that might be where we're heading, we might strip all that gloss away, all that shine away, and just be left with these foundational ideas. And that might actually be useful for people who just want to look at the technology itself, look at what these companies can actually do. So that's something which I'm really curious to see. Will that become a benefit from all of this as well? We'll kind of get back to the fundamentals, so to speak, of company creation. I don't know, but I think that it's worth getting your thoughts there.
Yeah, I think there will be a lot of companies created, especially as you look forward, 3 or 4 or 5 years down the road when you start layering in AI and some of the technology that is still, nascent right now. And also, another thing is, I think that there will be a shift to more digital usage. So the customer is going to be more digital. So therefore, the Wells Fargos and the Bank of Americas and all the big companies are going to want to spend more on digital technology and digital tools. So that will help create more small companies to build products that they can buy. So I think there will be a lot of that, the next 4 or 5 years.
Yeah, and looking at the recovery roadmap that you outlined, and obviously this is just a guess, nobody knows what the future holds, but the things that you stress there that will happen, I think right now you said the most important thing is empathy. Communicate frequently, give your employees a voice, and really communicate with people on a human level, understand what they're going through on a human level. And then beyond that, extend customer lifelines over the next year to 18 months, helping people to get some control over their finances. And I think these are two pieces, again, which really do get to the heart of what financial services is about: treating people with respect and dignity and treating them the way you want to be treated. And then looking at, how you can actually help, what you can do as a financial institution to help your small business customers, your individual customers, your, people who are approaching retirement, who have already retired, who are wondering what all this means. And I think there have been cases over the last decade where fintech hasn't really looked at those pieces as the most important pieces of the equation, and maybe they should have done. But now, by focusing on that, you have an opportunity to really set yourself apart from a lot of the other players in the space. So what other pieces would you say are really important for people to be considering now as we make our way, hopefully at some stage here, back out of this mess?
Well, not lots of understanding. It's hard for a financial institution to show a lot of empathy because, they have to have the loans repaid, and they have to have the customers follow the regulations and so forth. So it's hard. But that said, the bar isn't very high. Customers really aren't expecting much empathy from their bank, honestly. So if you can go out there and send a letter or communication, or even do small things that shows that you care, that this is going to go a long way. You're going to give your customers a nice surprise by communicating with them. I just got a letter today from a bank that I deal with, and they had just changed the credit line, the interest rate. They had just lowered it to a different index to benefit the customer. And it probably is a very small amount of money to them, but it just showed that they were trying to, on the margin, help the customer have things be a little bit easier to handle. So there's a lot of things that you can do on the communication for the next 18 months.
Well, and point taken about the bar being low, right? And I think that's spot on. It doesn't take a massive amount to prove that you do actually care, or at least fake it convincingly, maybe, if that's the type of organization that you want to be. But the bar has been so low for so long, and I think consumers have a distrust to some extent that banks have their best interests in heart. And that's not been my experience within the fintech space. I know a massive number of people who work in the space really do care about people and really do want to help. And I think this is an opportunity to demonstrate that and to show that, which is something that's really important. Now, we're coming up on the end of our time, and I just want to end by talking about the article that we're talking about, and I'll make sure we include a link in the episode description here, but the ending sentence is, "No one born after 2005 will ever picture a physical branch when they think of a bank." That is a bold prediction, and it's really difficult to argue with based on where we're coming from right now. But this is kind of the long-term future that you see, is kind of the death of the bank branch. Maybe too late, maybe it should have happened a while ago, but are we now at that point where we can say with confidence that this is no longer a system, this banking in branches system, that we need to keep going?
Yeah, I toyed with that. What day was that? First I started with 2000. Oh no, I think that someone born in 2000 might still think of a bank branch. But the bigger question is, is this the end of the bank branch? And I mean, I have thought that would happen probably earlier than 2020, but I don't think that a lot of financial institutions can afford to do all they need to do digitally now in light of the coronavirus and the pain that's going to happen in the next 18 months, and also have physical branches at the same level. So something has to give, and I think it's going to be the branch. And I say that's a silver lining for the consumer, that they'll just be that money that went into the branch system will go into better digital and better customer service and better support.
Yeah, I think there are, again, a number of people who would say that's a very good thing for the industry. And again, consumers who would say, please do meet us where we prefer to be, which is frequently digital. And in a situation where it has to be digital, I think you'll see some behavioral change, large scale behavioral change on the part of consumers, and just what they expect as they get comfortable with digital banking experience, assuming it's a positive digital banking experience. But as that comfort level goes, then the idea that you might go back to a bank branch is going to be more and more difficult to imagine. I think the last time I was in a bank branch was because I needed to get something notarized when I physically went to a bank. I have not been to a bank branch outside of that in probably 4 or 5 years. And that just goes, and I haven't missed it, to be totally honest. And I think that as more people get that experience, we'll see more of it. So, well, thank you again for taking the time to chat with me. I knew you would have some interesting thoughts. I'm glad we were able to get you on the record here, and we'll continue to monitor the situation, of course, and see what happens. But thanks again for joining me.
Thanks a lot, Greg.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.